Good morning, everyone. As we we just about headed into European trade on Wednesday, the 19th of June. Probably not that much to say today. I mean, we'll talk about the UK. We'll talk about inflation in the UK now in a minute. It is Juneteenth Day, Juneteenth Independence Day. I'm not really sure how you say it. Obviously, I am not American, but it is that day in the US, and treasury markets and equity markets will be closed today, so not expecting much volatility out of anywhere across the US today, so maybe a little bit of a steady day, but not really yesterday. Nvidia eclipses Microsoft as world's most valuable company. It's overtaken everything. It's overtaken Microsoft, Apple, Saudi Aramco. It's climbed its way to the top of global companies. So now Nvidia, highest or most valuable company in the world as of yesterday, and that's an interesting one, and you'd have to imagine it's probably set to continue. I mean, with what they have done with all of the AI chips over the last year or two, they made a big kind of a big gamble in going fully down that route. It's obviously paid off, and the owners, shareholders in that company will be pretty happy with the way the last year or two has panned out for Nvidia, and now obviously the most valuable company in the world. You have to imagine that's probably set to continue and potentially even widen. So we'll keep an eye on that as we go forward. Lended some support to equity markets yesterday. Also, equity markets boosted by softer than anticipated retail sales yesterday reinforces the expectations of the Federal Reserve cutting rates later this year. They are likely to cut rates. How much, though, is the question. The central bank have now changed their tune to 1, potentially 2. Whether we get that or not is a different question. Obviously, we need to keep an eye on the incoming economic data. For now, inflation is not where they want it. Still more progress to be done, or still more work to be done on that. But different sort of progress in the UK. The UK CPI has reached 2% for the first time in 3 years since obviously 2021. I believe it was May 2021. Can't remember off the top of my head exactly what month it is, but inflation, CPI, the total rate of inflation back towards 2%. Now the issue turns towards core CPI. Core CPI is still at 3.5%, right? That still needs to come down to give them full confidence of cutting interest rates. So we're not going to get a cut off the back of that tomorrow, but you may see one potentially even 2 more people jump across to vote for a cut. I still don't think a cut is the right thing at this point in time. Right, 3.5% is not where they want core CPI. Right, they want core CPI back closer to where actual CPI is at this point in time. Right, and they still do have more work to go. And cut interest rates now wouldn't be the best of ideas, as that may spark a further push higher in inflation, which is exactly what they want to avoid. Right, so a bit more work to be done, but again, another step in the right direction, and for us that means then another step in the direction of cutting interest rates. So didn't miss consensus. Core CPI still slightly higher. Month over month figure missed CPI. I mean, still 0.3%, still a bit too high in that respect, but Sterling's not had too much action off the back of that. Is a little bit higher. Market's probably hoping for a bit more of a miss, but not exactly massive volatility. 15-20 pips higher. Not too much to really see there from the UK. Aussie keeps trending higher. I'm looking at the Aussie a bit yesterday. I mean, that has pushed higher off the back of the RBA yesterday, and then weak retail sales helped continue that forward. Look, maybe some dollar strength hasn't quite panned out yet so far this week, but Aussie has pushed higher. RBA, slightly hawkish, one of the more hawkish central banks across the G8 space. That's likely to remain the case. If you look back to our video yesterday to the day before, we spoke about why that is the case. So I'm not going to speak about that in a lot of detail. Now, but relatively choppy markets. At this point in time, I look at the Aussie pushing higher, but it's still just pushing higher within that range that you've got. The Kiwi still in that range. Euro dollar's got a bit more clear direction to the downside, as you can see. Still not too much clear direction over the last while. Cable, come down to the support level. We're potentially looking for it to break, but it hasn't panned out. You've got, inflation, and the market's reacted somewhat positively to inflation. So, but again, just choppy price action. Dollar Swiss continues to push lower. The Swiss franc, strongest currency across the board over the last month or so, is rallying rallying everywhere. But stock index is higher off the back of that yesterday. Now Nvidia continuing to drag stock indexes higher, plus retail sales getting that to grind higher. Is there likely to be much action across them today? No. Probably not, with them being closed, or the cash market being closed a little bit later on. I can't imagine much action across US indexes. Bond markets are closed. You can see these aren't even moving. At least we have the futures on the S&P and stuff moving. But for now, or for today, sorry, no bond market trading. So nothing to see there today on that. Although slightly lower than yesterday's session, reflecting the miss in consensus off the back of retail sales. Had this bit of an ascending triangle on gold. They're kind of looking for that to push lower, but that hasn't panned out. Bit of US dollar weakness yesterday kind of pushed that a bit higher. You are back up at this resistance level. Be interesting to see if that breaks. I mean, it would kind of make more sense for gold to push lower, but again, things don't make full sense in recent months in trading, but I suppose that's just how it goes. Aussie yen pushing higher. Dollar yen continuing to push higher. Yeah, the way that I was saying yesterday, there's and some other market participants saying there's potential for a further hike in July, and the Japanese yen sells off the back of that. So again, not much logic when it comes to that one. In terms of data later on today, there is not much to go off. There's some housing market figures out of the US, but really that's it. We get some GDP figures out of New Zealand a little bit later on. Consensus is for that to be at 0%, 0.2. Not likely to impact markets too much. Kind of inflation still too high on that. Growth, the difficulty with that situation is because if inflation is still high and they don't have growth, makes them a little bit less confident to talk a bit more hawkishly or even consider interest rate hikes. But needs must sometimes when they've put themselves in the situation that they've put themselves in. So only got themselves to blame for having that issue, I think. But yeah, nothing really out rested today. Probably likely to be a bit of a choppy day. But sterling reacted positively to inflation, probably more so due to the fact that core CPI is not where it needs to be. But inflation, for the first time in 3 years, back to 2% in the UK. Brings us forward to the Bank of England tomorrow. They're likely to acknowledge that, you'd have to imagine. I reckon maybe one, possibly two more people earning on the side of an interest rate cut. But not just yet. Still a little bit more progress to be made in terms of core CPI. Well, that's what logic would say. Again, these central bankers don't seem to have a great deal of logic when they make some of these decisions. So we'll cross that bridge when it comes to it tomorrow. But for now, probably best you keep your money in your pocket with the US being off for the day.